Ethereum, the world's second-largest cryptocurrency, has taken a significant hit in recent weeks. It has plummeted to its lowest value since 2020. This decline represents a 45% drop in its price. In comparison, Bitcoin, the leading cryptocurrency, experienced a more modest 10% decline. This discrepancy suggests that Ethereum may be grappling with challenges beyond the broader market downturn. The crypto market has been facing headwinds from various macroeconomic factors. These include rising inflation, interest rate hikes, and geopolitical uncertainty. Despite attempts to recover, Ethereum has struggled to stay above the $1,880 mark. It faced resistance near $1,950 and ultimately closed the first quarter of 2025 with a 45% loss. This translates to a staggering approximately $170 billion erased from its market value. The recent fall below the crucial $1,800 support level is particularly concerning. It signals a potential further decline in the near future. Ethereum's price drop is not merely a technical correction, it reflects deeper concerns within the crypto community. Investors are increasingly worried about the platform's long-term prospects. The once booming DeFi and NFT sectors, heavily reliant on Ethereum, have also shown signs of slowing down. This slowdown further contributes to the bearish sentiment surrounding ETH. The question on everyone's mind is whether this downturn is a temporary setback or a harbinger of a prolonged crypto winter. While some market analysts remain optimistic, pointing to Ethereum's strong fundamentals and potential for future growth, others are more cautious. They argue that the factors contributing to the current downturn are unlikely to disappear overnight. This uncertainty has led to a state of heightened volatility in the crypto market. Both investors and enthusiasts are left wondering what the future holds for Ethereum and the broader crypto ecosystem. The decline in Ethereum's price is mirrored by a worrying trend, a significant drop in network activity. Data reveals a drastic decrease in active addresses on the Ethereum blockchain. At the beginning of 2025, there were approximately 525,000 active addresses. This number has plummeted to around 333,000. This decline in active addresses suggests that fewer users are engaging with the Ethereum network. This reduction in network activity is further evidenced by other metrics. Transaction fees, which serve as a measure of network congestion, have dropped significantly. They are currently at a record low. This indicates that fewer transactions are competing for block space on the Ethereum blockchain. The burn rate, which reflects the amount of ETH destroyed through transaction fees, has also hit a record low. The decline in network activity is likely linked to several factors. The overall crypto market downturn has undoubtedly dampened investor sentiment and reduced trading activity. Additionally, the rise of alternative Layer 1 blockchains, often touted as being faster and cheaper than Ethereum, may be drawing users away. These blockchains offer competitive advantages, such as lower transaction fees and faster transaction speeds, which are attractive to both developers and users. The decreasing network activity raises concerns about the long-term health of the Ethereum ecosystem. A thriving blockchain relies on a vibrant community of users and developers. If users continue to migrate to alternative platforms, it could stifle innovation and growth within the Ethereum ecosystem. This, in turn, could negatively impact the value of ETH and hinder its future potential. The much-anticipated Dencun upgrade, implemented on the Ethereum network with the aim of enhancing its long-term sustainability, has inadvertently exacerbated inflationary pressures. This has further contributed to ETH's recent price struggles. The upgrade, while intended to optimize the network, has had the unintended consequence of increasing the total supply of ETH. Contrary to expectations that Dencun would help curb inflation, it has led to a surge in ETH's total supply. This surge has effectively reversed the deflationary trend observed following the successful implementation of the merge. The burn mechanism, designed to destroy a portion of transaction fees and control inflation, has not been as effective as anticipated. Only 53 ETH were burned per day last week, a figure significantly lower than what is required to offset the rate of new ETH issuance. This underwhelming performance of the burn mechanism is directly linked to the lower transaction volumes and reduced network activity discussed earlier. With fewer transactions occurring on the Ethereum network, fewer fees are being generated, and consequently, less ETH is being burned. This imbalance between ETH issuance and ETH burning has tipped the scales back in favor of inflation. The resurgence of inflationary pressures on the Ethereum network has alarmed some investors. They worry that an uncontrolled increase in ETH supply could devalue their holdings over time. This concern is particularly relevant in the context of the current market downturn. Investors are increasingly seeking assets perceived as safe havens or stores of value during times of economic uncertainty. While both Bitcoin and Ethereum have experienced price drops in recent times, the severity of Ethereum's decline, coupled with its internal challenges, paints a contrasting picture of the two leading cryptocurrencies. Bitcoin, often seen as a store of value and a hedge against inflation, has shown greater resilience in the face of market turmoil. Its more established position and simpler use case as digital gold have contributed to its relative stability. Ethereum, on the other hand, with its more complex ecosystem and wider range of applications, faces a broader set of challenges. Its dependence on network activity for value accrual, coupled with the recent issues surrounding the Dencun upgrade and the resurgence of inflationary pressures, has made it more susceptible to market volatility. This contrast in performance highlights the fundamental differences between the two crypto giants. Bitcoin, with its limited supply and decentralized nature, continues to attract investors seeking an alternative to traditional financial systems. Its value proposition as a store of value remains relatively intact, despite its price fluctuations. Ethereum, while boasting a more versatile platform for decentralized applications, faces an uphill battle in proving its long-term value proposition. The upcoming Pectra upgrade, scheduled for release later this month, is being touted as a potential solution to Ethereum's inflationary woes. However, it remains to be seen whether it can effectively address these concerns and restore investor confidence. Until then, the contrasting fortunes of Bitcoin and Ethereum serve as a stark reminder of the complexities and uncertainties inherent in the ever-evolving world of cryptocurrencies.